Adrian says, "Good evening, gentlemen. My name's Adrian, and I've been listening to your podcast for the past 4 months. I've learned a ton of new concepts and ideas for my wealth building journey, so I appreciate that. Now, here's the deal. I currently have $53,000 of debt. $9,000 of that is credit card debt with interest rates that range from 12% to 24%. $12,000 is a car loan with a 3.6% interest rate, and $32,000 of that are student loans. I make about $44,000 a year, and my total expenses come out to be about $2,100 a month. I'm also married, so my wife helps a lot with the expenses as well. Should I keep paying my student loans or should I get aggressive with my credit card debt? There is interest accruing on my student loans, but I don't want it to strain my margin. Thanks for reading this, and I look forward to hearing from you both soon." Robert, let me jump in here real quick because I love this question from Adrian, specifically because they have the right idea. They want to get rid of the credit card debt. They know it's high interest debt and it's not something to keep around. But there are a couple things I want to call out. The first one is, you mentioned my expenses come out to $2,100 a month. I'm married, so my wife helps a lot with the expenses as well. Just want to remind everyone, if you are married, it is a very good idea, with some weird extreme circumstances not to, but it is a very good idea to combine your finances, be on the same page about what is going into our joint checking account every month, what we are spending every month to run our household, what we are investing into each other's accounts and into our own retirement accounts so that we have a wonderful nest egg for us to retire on in the future. Being completely aligned on where you are today and where you're going financially just makes it so much easier to build wealth with a spouse. So Adrian, you mentioned that your wife helps a lot with the expenses and my expenses come out to about $2,500. Really want to encourage you guys, if you're not already, to build the honest budget with everyone's income going into a single bucket and everyone's expenses coming out as the household expenses, not Adrian's expenses or Adrian's spouse's expenses, right? You guys are on the same page with money and you're growing your wealth together. So that's like a really big differentiator, what I've seen with people who are wealthy in their 40s and 50s and married, and then the people who are not wealthy in their 40s and 50s and are also married, right? Being on the same page as early on as possible in your marriage with money. It's just, I've done a lot of these calls with people and I see it all the time. Being on the same page, very important. So to answer your question, just like super simply, credit card debt, that is the number one thing you need to worry about. 12 to 24% interest rate, that is absurd. Get rid of that as fast as you possibly can. When it comes to the car loan at 3.6%, I would bet that that is lower of an interest rate than the student loans. The student loans are probably closer to 6, 7, or 8%.
Yep.
So I would probably start tackling the student loans next. We always encourage people to follow the avalanche debt paydown method, which essentially means you're paying down the debt with the highest interest rate first. Because like what Robert and I always say, you can't out invest high interest debt. If you've got a 24% interest rate here, a 19% interest rate here with your credit cards, and then let's call it a 7.5 or 8% interest rate over here with your student loans, you're going to focus on the higher interest rate with the credit cards and then focus on the student loans next at that 7 or 8%. Then with the car at the very bottom of the totem pole at 3.6%. Our goal, of course, is to be largely out of debt, especially high interest debt, as we enter retirement. I would imagine the way you're talking here, you guys are probably still in your 30s and 40s. So you can probably keep that car loan around a little bit longer, just depending on how big that monthly payment is and how much it eats into your monthly margin. But the goal, of course, is to pay it off over the next 2, 3, 4 years whenever the note eventually expires.
Yeah, I think that's a great way to cover this question. And the most important takeaway, I think, for me is making sure everyone understands when you sign the dotted line and agree to get married, you're one entity. And although you may have a past and you may have old student loans or some old credit card debt, you need to have the hard conversation to be able to understand how do you move forward with that debt. Because all too often we see couples where the husband's hiding things or the wife is hiding things, and it ends up being the downfall of the marriage because they couldn't be open and honest about their financial situations. And I strongly suggest getting rid of that mindset. Because if you both know exactly where you stand and you understand your kind of pitfalls and your weaknesses in your financial journey, you can help each other. But if the person you love and you're married to does not have the full picture of where you're at financially, then it's really hard to get to a place where you're both living, the lives you dream of and retiring comfortably. So have the hard conversation, lay it all out there, and figure out the best strategies. You wouldn't be asking the question on the podcast if you weren't trying to come to that conclusion. So we appreciate that. But just everyone listening, make sure you understand that. Don't keep secrets. Make sure your spouse and your significant other knows where you're at financially, especially if you're the breadwinner.
And just to linger on that a little bit longer, Robert, let's say, for example, Adrian or someone else out there listening is trying to pay off their debt or trying to invest aggressively and really get after it with their money, but their spouse maybe isn't on the same page. Maybe their spouse doesn't understand what's going on, why they're wanting to do these things. And their spouse is now like, why are you being so cheap? Where's our vacation? Why can't we do these things? I want to go eat out. Where's date night? I want to go buy these new shoes, right? Like being on the same page not only means that you all are on the same page financially, but it allows you now to be on the same page emotionally and relationally and say, hey, we are very much determined to go through an 18 to 24 month season of our lives of austerity and working our butts off to make a little extra income here and pay off our debts and really get our base built or save for that big down payment or the next big thing that we want to do with our lives financially. That is so healthy. That is how a long lasting, wonderful marriage is built. And I could not emphasize that enough.
Yeah, I agree. And I want to say one more thing. I've gone through those seasons where money gets lean sometimes. And, if your spouse or your significant other doesn't know that, and all of a sudden those meals dry up and the trips dry up, or the Lululemon and Nike dries up, whatever it is, they need to know why. And if they do, and they truly love you, then they can go through it with you. But I find so many people keep it hidden because they're embarrassed or they're scared or worried. And I don't think that is a sustainable strategy. So I love this question and I love the takeaway because it comes from two different perspectives with you and I, Austin. And I think it's so important for people to just know and understand they have to have the hard conversations.